Lots in the news about Bitcoin prices going up, going down. What's going to happen? Are they going to go down more? Are they going to go up more? Nothing in the news about Ethereum and other cryptocurrencies. So we've talked about Bitcoin before on the Wealthability Show. Today we're going to talk about the other cryptocurrencies, in particular Ethereum, just because it is certainly the leader of the other cryptocurrencies, certainly from a pricing standpoint. And we have an expert with us today on the Wealthability Show, Matt Leising. Matt, really, really good to have you on the show today.
Oh, thanks, Tom. It's really a pleasure to be here, and thanks for asking me to come on.
So, Matt's the author of Out of the Ether, the amazing story of Ethereum, and the $55 million heist that almost destroyed it all. So, we're not going to get too deep into that. But, Matt, if you would give us a little of your background, why you seem to have specialized in Ether and Ethereum, and kind of what's that background? What you got you into that? Why aren't you a Bitcoin expert instead of an Ethereum expert?
Yeah, that's a great question. Um, so it comes from my background as a financial journalist. I got hired by Bloomberg News in 2004 in New York City to start writing about Wall Street and finance. I sort of made my way through a bit of a surreptitious route to kind of market structure. And this is like how markets work in the United States. I started in the derivatives market where I was covering futures exchanges like the New York Mercantile Exchange, where oil and gold futures are traded. Then I expanded into the Chicago exchanges where you've got financial products like US Treasury bills, the dollars held overseas known as euro dollars. Those are futures products. And so this is a whole area that I knew nothing about, but it's got a huge market structure component to it because there's like clearing and the banks are involved, and there's brokers, and there's obviously the buy side with hedge funds and insurance companies and agriculture companies and all that sort of stuff. So I started kind of dipping my toe into how those markets work. Um, I expanded a little bit into then like U.S. Treasury markets, like for cash bonds and how the Treasury market works. And then the financial crisis of 2008 happened and everything hit the fan. And it turned out that market structure was kind of a big deal coming out of that crisis, because one of the problems in the financial crisis was the over-the-counter derivatives market, which um, was unregulated. And so now coming out of the crisis, they wanted to regulate how over-the-counter swaps traded. And I was sort of that's what I'd been writing about for a couple of years. So I was in a good position to write about that. So Dodd-Frank came about, which was the U.S. law that was going to change all of the financial world to make sure that another financial crisis didn't happen again. Title VII related to swaps, and so I was into that for quite a few years after the crisis, into about 2010, 2012 or so. As now in the same period of time, Bitcoin had been released and was in the wild. It started trading in 2009. I didn't get it for several years. I just thought it was, vaporware. I thought it was ones and zeros. How can that have any value? So it didn't hit me at first, but then after a little while, I read something in The Economist about the blockchain, and that was like, wow, okay, that was the light bulb moment for me, because now I understood that what made Bitcoin possible was the blockchain, which is in essence a network of computers that are spread all over the world. And what they do is maintain a ledger of Bitcoin. So every time a Bitcoin is sold or bought, it's recorded on the ledger. Every computer on the network updates to make sure that the ledger is accurate. And that's what allows for a trustless environment. So you can trade Bitcoin with somebody in Argentina. You don't need to know who they are, because you've got this network of computers that's making sure that the transactions are valid. If they're not valid, the transaction gets killed and you don't trade. So with that knowledge, I'm like, oh wow, Wall Street is just like that. It's a network. It's all these guys are connected by computers. You've got the banks, you've got the hedge funds, you've got pensions, you've got insurance companies, you've got broker dealers and all that stuff. And I'm like, if they're on a network to begin with, and then like there's this Bitcoin network that's working, blockchain could probably come to Wall Street and revolutionize the way that transactions are managed, and it could cut down on the time. It could cut down on how errors are made in the system. And so that's where I sort of like said, okay, I think I should start covering blockchain as part of the market structure beat that I'm doing at Bloomberg News. Um, At first my editors were like, what the heck is a blockchain? But they came along, and it it kind of bore fruit, because that's what Wall Street was working on. It was this idea that if they got into a network and they were all connected, in a horizontal way rather than these silos, like these vertical silos that banks have built around themselves, right? So they could, in a horizontal fashion, like a flat kind of architecture, all of a sudden they could be, confirming and okaying transactions in minutes rather than in hours or days. So I just thought that was like a huge potential, and so Wall Street was kind of working on that, and that's how I got into it. Bitcoin never came into the equation, because Wall Street didn't really want to touch Bitcoin back in those days. It was seen as, something that was used by drug dealers and criminals, and it was completely unregulated. You had the scandals of like Silk Road, with Ross Ulbricht, and a lot of other things had happened. A lot of hacks, like the Mt. Gox exchange hack, and it was just seen as just poison. So Wall Street didn't want anything to do with Bitcoin, but they liked the idea of a blockchain. And so that's sort of the dichotomy of why I didn't become an expert in Bitcoin, but I did become an expert in blockchain. And then, a few years later, I think 2015 is when Ethereum came around. And so that was the next step.
Okay, so let's talk about the differences between Ethereum and Bitcoin. So we've talked about Bitcoin before on the Wealthability Show. Bitcoin is really, in my mind, just a token. That's all it is. It has a very single. It has a single use. Its only use is as a token, just like, frankly, gold. Its only use is as an exchange of value because it doesn't do anything. Okay. So Bitcoin is, people talk about Bitcoin as digital gold. It's not a stable in its pricing, but it's got the same idea that it doesn't do anything and it's a very limited supply. Bitcoin has very limited supply. So talk about the differences between Bitcoin and Ethereum. And it's really, I'm going to use Ethereum because people know Ethereum a little better, but it's really Ethereum and everything else,
That's right.
frankly, because Bitcoin is unique in its structure. And so, how do you differentiate those, and why is it? And then we'll talk about why is it that Ethereum doesn't move up and down as in pricing in value as much as Bitcoin.
Right. Yeah, I agree with you. Bitcoin is good at one thing, and it's really good at it, and that is being, a digital form of cash. That's exactly what Satoshi Nakamoto wrote in the white paper. He wanted an electronic, permissionless form of cash, and that's what Bitcoin became. So it is seen as a unit of value. It is now what was created, and what has, propagated since 2009 is a global payments network that anyone can access from anywhere in the world, that can't be censored by banks or corporations or governments. So that's incredibly powerful. You know, prior to this, you had to go through a bank, you had to go through Western Union, you had to go to somebody, you had to have an intermediary if you wanted to send money anywhere around the world. Now with the Bitcoin network, you can send it to anybody peer to peer anytime you want. So that to me is more than enough reason for it to exist, and more than enough reason for it to have value. Whether it's worth $91,000 right now, I'm not going to opine on that, but it has a value in my opinion. It is not useless. It is not vaporware. It is not a Ponzi scheme like a lot of people are still saying to this day. So it does that really well because it was built to do that really well. And it's a very lean blockchain, protocol. It doesn't have room for other bells and whistles, right? So it just moves the Bitcoin, and it keeps track of the ledger. And that's what it does. And like you mentioned, it has a cap on 21 million Bitcoin that will only ever be released into the world. So that's another function of it that people like, that there is a supply limit. So with that being, the inventor, the creator of Ethereum is a guy named Vitalik Buterin, and he was a huge Bitcoin fan and wrote about it for Bitcoin Magazine. Was really, taken by the technology, because it involved, cryptography, and it involved finance, and it was just something that really caught his attention. He tried to change, like he tried to like kick the tires with the Bitcoin blockchain and see if he could like do the things that he wanted to do with it, like what he had in his mind as the vision. But he realized pretty quickly that he couldn't. So he knew he had to build a new type of blockchain. And that's where Ethereum was born. And what Ethereum does is it uses the same concept of the Bitcoin blockchain, where it's a global network of computers that verify and check every transaction and keep track of it on the ledger. It's immutable. You can't change it. Nobody can censor it. But what Ethereum did was it now allowed, instead of just like moving Bitcoin from point A to point B, Ethereum allowed you to write a computer code and write a program, basically a script, and you could write this program, what's known as a smart contract, and then put it and launch it out onto the Ethereum blockchain. So that opened the door for you to do almost anything on a blockchain. And I know it, so before I get ahead of myself, that's the promise, right? That is the breakthrough of Ethereum, was that now all of a sudden you could do almost anything you wanted, because if you think about it, almost any contract or agreement or function can be put into code and written as a script of a if then XYZ, like you can have a bond that is encoded into a smart contract. So somebody buys the bond and you have an interest payment that's due every month and it's X amount, and the all of that will be written in the code, and it will live on the Ethereum blockchain, and it will send out requests for payment, and if you don't make your payment, then you default on the bond, and everything is encoded and the bond is no longer yours and it's taken back. And so this sort of automation of finance or of other aspects of industry was the huge breakthrough. It was like I wrote about in my book. It was sort of like Vitalik and the people who created Ethereum were giving you a canvas with the blockchain, and you could put anything you wanted on that canvas as long as you were able to write a smart contract that could, go and live on the Ethereum blockchain. So it was a huge step forward in this technology. One of the first things that was created were, you can now, with a few lines of code, create your own cryptocurrency, and that's where all of the altcoins came from.
So they all came off of the Ethereum blockchain.
They began with the Ethereum blockchain for sure. And when we talk about blockchain and what it does in culture or finance or commerce, we really are talking about Ethereum. If Ethereum hadn't come about, none of this would have, that's the beginning of it all. Other blockchains have come along, like Solana and a few others, that have improved upon some of the functions that Ethereum, has. They've improved on the speed, or they've improved on the security, but none of them have really captured what Ethereum has captured in totality. And that's why it remains the most active blockchain, and that's why it has the most developers, and that's why pretty much everything, while there's a lot going on, the big stuff is always happening on Ethereum. And that's
so like most of the smart contracts, most of that kind of stuff is happening on Ethereum.
Yeah, I mean, you're starting to definitely see, like Solana is very fast, but it's not decentralized the way that Ethereum is. It's, in fact, Solana has gone down several times and needed to be restarted, which, if you're a blockchain enthusiast, that's the last thing you want to hear, is that somebody's in control of that blockchain and can like kick it, and like restart it. Ethereum in its history of 13, 14 years now has never gone down, which is quite amazing. It's very robust in that way. The problem is it's not very fast. It is working on becoming quicker in terms of the amount of transactions per second that it can handle. But it is a slow process, and they are trying to do that. They keep having upgrades. The last one was Fusaka, which was a couple months ago. That is helping to improve it. But in terms of the safety and the scalability and the reliability of a blockchain and the decentralized nature, which is key here, Ethereum's got all of those attributes going for it.
So Ethereum does a lot more than Bitcoin does. Basically, I look at blockchain. I think that the miracle of blockchain, frankly, from my point of view, is it's triple entry accounting, right? You have a debit, credit, and you have an audit. Because every transaction is audited by every other transaction, right? So every computer on the blockchain is auditing that transaction, making sure it's right, which I think is the beauty of Ethereum and the whole blockchain in the first place. So, but one of the things that is different between Bitcoin and Ethereum is that Ethereum doesn't have a limit, as I understand it, on how much Ethereum can be produced. It's more like, from that standpoint, it seems like it's more like a stock, right? Apple can issue more stock. They can
Right.
go and say, hey, we're going to just issue stock, and they can actually raise money by issuing stock. And if I understand right, you correct me if I'm wrong, but Ethereum can do the same thing. They can issue, there can be um, uh, more Ethereum out there. It's not limited like Bitcoin is. Is that one of the reasons that, first of all, have I said that right? And second of all, is that one of the reasons it doesn't have, the high price point that Bitcoin has?
Yeah, it is true that there is no limit on the amount of Ethereum that will be issued. They don't have a 21 million cap like Bitcoin does. Um, so yeah, that is, it can be inflationary. They have implemented in recent years though, a system where as Ethereum gets used, like as the blockchain gets used and transactions go through, a certain amount of ether, which is the cryptocurrency that we're really talking about, um, it goes and it gets burned, it gets destroyed. So there are times when there's a certain amount of activity on the blockchain where more ether gets burned than is being created. And so that's kind of putting a check on the overall supply of it. But I think the founders of Ethereum, and the people I wrote about in my book, they the cap on Bitcoin to me has always been a monetary policy. That's sort of like what Satoshi was interested in. It was creating a digital currency. Ethereum and Ether are very different. They are much more a global computer. That's the way that it was being sold back in the day when it was coming out in like 2015, 2016. It's a global computing platform that anybody can put a contract on and it lives there, and then anyone in the world can access it. And so with that in mind, they weren't really thinking about capping ether. They thought of ether as the fuel. That's what you need to have to fuel transactions on the blockchain. So, to me, so that makes sense to me. And what so that is a big difference in my opinion for if you're looking just at the economics of the different of the cryptos of Bitcoin versus ether. That's
Which
obviously.
which would be in a way like silver versus gold, right? I mean, silver has a lot of uses. Gold is just a token, right?
Mhm,
Whereas silver, there's less of gold, right?
mhm.
And it's not produced as readily as silver, but it doesn't have all the uses that silver has. And so there is this, in my mind, this kind of relationship: gold versus silver and Bitcoin versus Ether.
Yeah. Yeah, no, I think that's a good comparison. And it's never really quite made sense to me that, right now, let's say just quick math, Bitcoin is roughly 90,000, ETH is around three. So, that's a 30-fold difference. Like I don't, in my opinion, I don't think it should be that big of a difference in the value because I feel like Ethereum has, a really the value proposition for Ethereum is really strong, and you're seeing more and more banks and payment processors like Visa and Stripe and all these other folks are getting into it. And when they're getting into it, they're usually using Ether, and Ethereum. So there's some Solana out there. Solana is really big in the gaming world for web-based, Web3 based gaming because it's fast. But by and large, when we're talking about corporations and banks getting involved in blockchain and this tech, it's Ethereum we're talking about. And so, with that in mind, kind of that's like to me that tells me that's where people should be investing. That's where that's kind of what is grabbing the mind share. That's why Ether has, I think, the most developers still working on it. Solana might be close with that, but it is the thing that is grabbing people's attention and has been grabbing people's attention for years now.
So do you see, so we're seeing a run up in silver because of supply and demand. I mean, there's just this hugely increased demand because of AI and electric cars, et cetera, et cetera. Technology uses silver because it's such a good conductor of electricity. Do you see that potential happening with Ether then? That Ether will all of a sudden, like silver's tripled in the last 2 years. Do you see that kind of potential with Ether happening in the foreseeable future? And if so, what would cause that? What would cause that acceleration?
Yeah. I so I'm not an expert in this by any means, but in the whether it's going or I don't have a crystal ball is what I want to say, but I would say that I think what I mentioned before is that Ethereum is still slow as a network. It's in the 30, 40, 50 transactions per second range, where Visa is just, through the roof. I can't even remember what it is, but it might be, it's many, many, many times higher than that. So what I would keep an eye on is, Ethereum and the developers working on it have been pushing for years to increase that speed and the throughput. And once you start getting, Vitalik has made a goal of getting to, 100,000 transactions per second. That would be huge. And there's a lot that needs to be done to get to that point. A lot of changes that have to be made there, and they're working on these. There's a roadmap. It's all very public, but it takes time. And
So by
Ethereum is,
comparison, how fast is Solana?
gosh, I don't have the numbers in front of me, but it's much much faster. It's more like, you know, five digits. Like 10,000, 50,000 transactions per second. I mean, I hope I'm not wildly off there. I'd have to check that, but it's magnitudes faster. But it sacrifices some things to be fast. So one of the things I mentioned was the decentralization. So um, I would keep an eye on Ethereum's transactions per second and how that roadmap is being executed by the developers. Because if the mainnet, that's what is called, like that's the Ethereum mainnet. If it gets to that point where the underlying Ethereum mainnet can go to 100,000 transactions per second, that's a game changer. And I would think that the run up to that, where people are starting to see that, would probably lead to a lot more investment into Ether.
So do you see that as a reason that some uses aren't being done? For example, to me, the obvious use of blockchain would be a title, right? Title, property title, goods title, all of that. That's a logical use for blockchain because you need it audited. We have title insurance now, which to me like is such a scam, but all the banks require it because you have to prove title. Okay. Whereas blockchain, all you have to do is prove it once. Once you proved it, it's there forever. So is it the speed? Is that part of the reason for the slow adoption, or is it just the other political and economic pressures?
Yeah, but something like title, it's not the speed at all, because that's a very simple thing. You just encode the title into a smart contract, put it on the blockchain, and then you can see the ownership chain. So you don't need to pay, what is it, thousands of dollars when you buy a house to somebody to just go check a record. You can do it yourself. The thing there to me is the incumbents. You're taking away that market from somebody. So are they going to buy in? Are they going to give away that market to the blockchain where the title companies no longer exist? So that's and you get this friction in everything, because it's a new technology. It's coming in to try to take away markets. It's trying to get rid of intermediaries like title brokers. And so that is the thing. You would need like somebody who's really big in that market to kind of buy in and move in that direction, in my opinion, to see that change. And a lot of times they have entrenched interests and don't want to do that because it means less revenue.
Got it. So, what, so I I get you don't have a crystal ball,
Yeah.
but 5 years down the road, what do you see happening in the blockchain world? Because, when it first came out, everybody thought it was going to take the world by storm. It was the next big thing. It was bigger than anything. And then now we have AI. AI is way, has just blown by blockchain as a technology. And yet to me, there's so many great uses of blockchain. And it's like, but it's not happening. And I get what you're saying. There's political, there's economic interest, there's pushback on that kind of stuff. What do you think it would take for that? I mean, outside of a big player in a particular industry, what do you think it would take for blockchain to catch on the way AI has caught on?
I think it is catching on, to be honest. It's a bit behind the scenes, but the days of, the big shift that I've seen in 2025 was that corporations and banks and financial institutions are now pretty much all on board with what blockchain technology can do for them. They, for a long time, a lot of people kind of put their head in the sand and said it was, there's nothing there, this is useless. But they've realized that the efficiency gains and the way it can open up a global market for you and a lot of other things are too enticing to ignore. So a lot of the naysayers, I think, have lost that battle in the corporate world, in the financial world, and they are moving to implement blockchain technology, distributed ledger technology into their businesses and their industry. Some of it is behind the scenes, but if you just keep an eye on the headlines, every week there's more, huge names that are doing things using this technology. So it's not going away. I think corporate America and the corporations around the world have bought into it. They realize that if they don't stay on top of this, it's going to pass them by, and so that is going to continue. The genie's been out of the bottle for a long time, but it took a lot of people a while to really get their head around what the technology, what the promise of it is, and what it offers for them. And I think that has now happened and is materializing. So whether we are going to see it in our everyday lives is a bigger question. The convenience factor for me is a huge hurdle. It's still very difficult to open to get a wallet for a cryptocurrency. For just a wallet, a digital wallet on a blockchain is how you use. Basically, it's your point of entry for using crypto and DeFi and all that stuff. It's not easy enough to use, and it's been years. So it's also the fluctuations in price, scare a lot of people off. It's definitely not something you want to use to be paying bills or to be being, I wouldn't want to get paid in it right now because you have the chance that it could go up, but you have the chance that it could go down. It's not stable enough. I think stable coins are a really interesting adaptation. I think stable coins have brought along a lot of the corporate interests and a lot of the financial interests where they see, oh, here's a digital asset that can move instantaneously around the world and it doesn't fluctuate in value. So that's a huge plus for them. That's why JP Morgan has been using JPM coin for years. It's their internal, it's basically a version of a dollar, but that's digital. They use it among their branches around the world with certain customers. And, these things are working and they are being used every
So
day.
basically, that's just a faster way to move money.
Yes. Yeah. Faster, more secure, less errors. If you've ever looked into like the correspondent banking market where you want to send money around the world, it's costly. It takes days. It's often error prone, but it's a huge market. But digital currencies and stablecoins can disrupt that, almost immediately. Again, the gatekeepers of that market don't want to give away the
Right.
billions of dollars they make every year in that market. So that's another friction point.
I like
So
it.
yeah, I think this is the long game. This has always been the long game. It's not we've had booms and busts, but the technology is not going away. It's very similar to the internet boom and the bust of the late the 2000s, the dot-com era bust, when all those companies that thought just putting a .com at the end of their name was all they had to do. A lot of that, and there's a huge investor interest and a lot of money. All of that went away, but the internet didn't go away. The internet continued to grow and continued to change our lives. That's the same thing here. All the frauds, all the silly stuff you hear, yes, there's a froth and there's scammers, but there's also a real technology here that is changing, has already changed the world and continues to change the world. That's not going away, and people are getting more and more convinced of it and are now more and more willing to invest in it and figure out how it can help their business or help as an entertainer or as an artist. It's spreading into all these other different parts of our lives, and commerce that, is not going to stop.
I love it. I'm a huge fan. I've been a big fan of Ethereum for ever since I first learned of blockchain, because I do know that that's where the development is. And it's encouraging to hear that they're working on making it faster, getting broader uses, despite the pushback by people who would lose, right? If it's adopted, but certainly with a higher speed, it would make it easier. The easier it gets to use, the more it will be used. The book is Out of the Ether, and the author is Matt Leising. He's been with us today. Matt, where, besides buying your book, where else could we find more about your work?
You can search the web for me. I was running Decential.com or Decential.io. It was a web media company where we were writing about the folks that were building this stuff, all the interesting, fascinating people behind this technology. Decential.io. Yeah, check out the book. The thing I love about the book is that it really dives into the people behind this, and it's a very human story. There's all sorts of you know there's a lot of drama. There's a lot of like different people that came together to make Ethereum a reality, but there was also drama. There were firings, there was backstabbing, there was a lot of greed, a lot of geniuses at work here, and they created something almost in spite of themselves that is what we're talking about today. So it's a fascinating human story that kind of resulted in this.
I love technology. The real story. Exactly. The real story behind Ethereum. I love it. I think that whether it's investing as a pure investor, like we would in the stock market, we invest in Ethereum, in Ether, we invest in Bitcoin, what we're investing. The more we learn about this, the further ahead we're going to get, particularly in ways that we might be able to use it, or we might even be able to create our own industry. I'm a big fan of creating new industries. And I think that there's so much potential logically with the blockchain and with cryptocurrency, and Ethereum is at the center of that. And the more we learn about it, the way more money we're going to make and the way less tax we're going to pay. We'll see you all next time on The Wealth Ability Show. Thanks for listening to The Wealth Ability Show. If today's episode gave you a new perspective, remember this: the tax law is not your enemy. It's a roadmap. And when you know how to follow it, you can build real, lasting wealth. If you're a business owner or investor who's tired of overpaying taxes, the Wealth Ability Accelerator is your next step. You'll have the opportunity to work directly with me for 80% less than my standard rate. And I'll personally guide you through how to change your facts so that you can change your tax. Go to wealthability.com/bonus and apply today. Remember, it's not just what you make, it's what you keep.
This podcast is a presentation of Rich Dad Media Network.